Just quickly following up with a question from a subscriber who's asking whether there is a step-by-step guide they can follow for finding better trades. First of all, thanks for the question. Looking at the answer to the question, is basically two things that we need to discuss. The first one is probability, and the second one is the actual process that you can follow. Now, when we look for trades, we need to think in terms of probability. So that means we are always trying to get the odds in our favor, right? Now, we can do that by always making sure that we are pairing strong currencies against weak currencies. Now, I know that sounds super obvious, but it's amazing how many of us forget that point, and as a result, end up choosing trades with lower probability. Now, when we pair strong currencies that are expected to remain strong versus currencies that are weak and expected to remain weak, it drastically increases the probability of finding better trades. So that is always going to be your first step. The second step is the actual process that we need to follow. So the first thing you want to do is to get up to speed with all of the market moving events that are currently driving various asset classes right now, and get up to speed with everything that has happened while you were away from your screens. Now, if you are tuned into the market sentiment on a daily basis, this will be a very quick step. But if you're just starting out to do it, it obviously might take you a little bit longer to get through everything. The second step you want to do is do some intermarket analysis, right? So make sure that you are analyzing equities across the board, making sure that you're analyzing commodities across the board, fixed income, also obviously the currency space, making sure that you're in tune with everything that is moving the markets right now. And this will allow you to catch wind of any potential opportunities that you can capitalize on based on cross-asset flow. So maybe something big happened in the oil markets, for example, which can allow you to trade the Canadian dollar. Or maybe there is a strong risk on or a risk off tone, so you know that you can pair a safe haven currency against a high beta currency. Or maybe you see the BTP Bund spread skyrocketing due to some challenge in the Italian debt market, and you know that that is an opportunity to trade the euro. So these are all just examples, of course, but it'll help you to get the point. Then after you've done your intermarket analysis, then you can, of course, go through your daily risk events. So going through the calendar, whether it's an economic data coming up, whether it's scheduled central bank or political events, make sure to highlight which data points are the most significant and how and why they are expected to move the markets. That's very important. Make sure that you not only know what's coming up, but what the expectations are going into those events. That'll be very, very important. From this, you can plan a couple of possible trading scenarios that you can take advantage of when the news breaks, so that you're always prepared to pull the trigger as soon as that event takes place. Now, after this, you should have a very good idea of which currencies are strong and expected to remain strong, and those who are weak and expected to remain weak. Now, after that, you can obviously pair a strong one against a weak one for the highest probability trading opportunities. Now, of course, this step will require some knowledge of how sustainable a particular sentiment might be, whether a currency is expected to remain pressured or supported based on a specific catalyst will take a little bit of fundamental knowledge. And after that, you can basically assess the potential risk factors that would also immediately invalidate that trade idea. For example, let's say you are trading you're trading something like the Aussie yen, for example, right? So it's normally a very risk-sensitive pair. Let's say you're trading it to the upside based on a current risk-on environment. Make sure that you stay up to speed with possible catalysts that can shift the risk zone back to negative, so that when that type of news breaks, you know that you immediately need to close down that position or liquidate that position. You're not going to hang around. If a negative news item comes out that changes the tone, you can just quickly get out of that position very fast. Now, if something breaks over the wires that changes the actual reason why you're getting into a trade, that's obviously going to be a very obvious step for you to get out of that trade. So after you've established your bias, then you can always move over to the chart and use any of the many technical strategies out there to look for a high probability place to enter and exit on the charts. Knowing in which direction to trade based on the sentiment means that you can basically use any of the many technical methods out there in your favor, because you already know in which direction you should be trading. Then, of course, if you have access to something like a audio squawk is a great tool that you can use, basically providing some excellent trading opportunities by catching wind of market moving news as it happens, and helping you to basically jump in as soon as it happens and reacting real fast in the market. So going over these steps quickly, the first one, getting caught up with all the current and most important news events. Second one, do your intermarket analysis to see how various asset classes are performing. Step 3, do your analysis of the daily risk events that's lined up. Step 4, make sure that you pair a strong one against a weak one. Make sure also that you find your high probability entries and exits based on your technical method. And then number 6, have that audio squawk tuned up in the background to make sure that you can catch wind of that market moving news. So I hope that helps as a quick step-by-step guide for helping you find better trades. Of course, if there's any other questions, don't hesitate to let us know.